Welcome to another video. So in this video, we'll try and understand few important things that you must do before the financial year ends. That's basically 31st of March 2025. So we'll understand four such things to do under income tax and similarly four important things to do under GST. First, let's touch upon income tax. And the main thing to find out here is, as an individual, which is the tax regime you're going to opt for, whether you want the old regime or the new regime. One main thing that you must understand is that if you opt for the old regime, then you get the benefit of a lot of deductions and exemptions. But if you opt for the new regime, you will not get these benefits, but finally the tax payable at the end may be lower than the old regime. So if you opted for the old regime, then there's a very famous section which talks about a lot of deductions, and that is ATC. And if you contribute a maximum of 1,50,000 rupees, then you get a straight deduction of this amount from your total income when you compute tax under the old regime. So there are many avenues for investments under ATC. It could be tax saving mutual funds, it could be public provident fund, it could be provident fund. So make sure that before 31st March 25, if you opted for the old regime, then you make an investment of at least 1,50,000 rupees so as to max out your benefit and get the entire amount as a deduction from the total income that is computed under the old regime and ultimately save tax. But if you opted for the new regime, then mind you, you will not get any benefits such as ATC, ATD, ATG and all that. But there's one important section called ATCCD2, which talks about National Pension Scheme or an NPS, where it says that if you are a salaried employee and your employer is contributing some amount to your NPS, whatever is the amount contributed by the employer or employer contribution, up to 10% of your salary, that's basically the basic salary, up to 10% of the basic salary, you will get as a deduction under the new regime under this particular section. So typically new regime does not allow any deductions or exemptions, but there's an important section which most of them don't know, and that is ATCCD2, which says that as an employer, if they're contributing any amount on your behalf to the NPS fund, then up to 10% of your salary you can avail as a deduction from the total income when computing tax under the new regime. So that's the first point. The second one is capital gain investments. Now, if there's a case where you have sold your residential house property and you plan to purchase or construct a house property in the near future, then there is a particular section called section 54 which says that the gain that arises on the sale of your house is completely exempt from tax. If you invest the same into the purchase of another residential property. So if you sell one house property and within the prescribed time limit you're purchasing or constructing another house property, then whatever is the amount invested or whatever is the capital gain that arose as a result of the sale of your house, the lower of that will be an exemption for you, and up to that amount there'll be no capital gain tax on the same. But mind you, all this should be done before 31st of March 25 if you want to avail this benefit of capital gain, where you sell a house, get the gain, invest the gain, and plus some other money into the purchase or construction of a new house. Whichever is lower, the amount invested or the gain will be an exemption for you, and this is to be done before 31st of March 2025. That's point number 2. The third one is a newer concept, and that is called ITRU or the updated ITR. Now typically for an individual, the original income tax return due date is 31st of July. Now you still have one more chance to file the return by 31st of December, which will be called a belated ITR deadline or belated income tax return due date. But after this date, you still get one more chance by the way of ITRU to file your income tax return. So say you had filed your return in July or December, but now you want to show more income, or there happens to be more income in your calculation, you want to pay more tax. Or say you have forgotten to file your ITR in July and in December, you can still file your ITR by using the concept of ITRU, which is a newer concept which was brought out by the government. Now what it says is that to file the income tax return, you have a deadline of 24 months or 2 years from the last date of the assessment year. So for 31st March 2025, if you work backwards, that's 2 years before, then the last date is 31st of March 2023, which is relevant to the assessment year 20 to 23 or the financial year 2021-22. So to summarize, for financial year 21-22, if you have not filed your income tax return or you want to file return to show more tax, then why not? You can use the concept of ITRU and file the same before 31st of March 2025. Coming to the last point on income tax, and that is clearing MSME dues, an important compliance. MSME stands for micro, small, medium enterprises. There is a particular section in the Income Tax Act called 43BH, which says that for micro or small enterprises, so medium is ignored here, for micro or small enterprises who are basically into manufacturing or service provision, if they have supplied goods or services to you and as a customer you have not made payments to them before 31st March 2025, then whatever is the outstanding payment to them or payments to them, 100% of that outstanding balance will be added to your income when you file your income tax return, which it becomes very deadly for you as a customer. So if you don't pay an MSME vendor or a micro small manufacturer or service trader, service provider or trader, traders of course it is not applicable, only manufacturers and service providers. If there's any balance that is pending to manufacturers or service providers before 31st of March 25 and that is not being paid, 100% of that payable will be added to your income when you compute your income tax liability. Now this again depends on the agreement that you have with the MS vendor, micro small enterprise. If you have an agreement with the micro or the small enterprise, and the agreement says that the credit period is after 45 days, let's say it is 90 days of credit period, then you must ensure that the payment is made to the micro or small enterprise within 45 days. Number one. Number two, if you have an agreement with a micro or a small enterprise, and the agreement says that the credit period is less than 45 days, let's say 30 days, then you must ensure that the payment is made to them within 30 days. Third scenario, if there's no agreement at all, then what they say is that the payment should be made to the micro or the small enterprise within a maximum of 15 days. So three situations put together, you must ensure that maximum the payment is made within 45 days of raising the bill by the micro or the small enterprise. Otherwise, 100% of whatever is pending payable to them as of 31st March 25 will be disallowed or added to the income portion, and then you have to pay tax on the same. With this, we come to the end of the important things to understand under income tax and to do before 31st of March 25. Coming to GST. Well, in GST, you have your yearly compliances to be done, especially before 31st of March. And the first thing is to furnish a letter of undertaking. Now, if you are a service exporter or an exporter of goods, you're exporting goods outside the country, then you can very well do so without the payment of GST. But if you're doing that, then you must enter into a bond with the government or file a letter of undertaking with the government for claiming that exemption of GST. So every financial year an LUT is to be filed, and before you make the first export of service or export of good, you should ideally file the LUT. So for 25-26 financial year, before you start exporting from 1st April 25, make sure before 31st March 25 you file an LUT, which is an easy process online, and then start your export process. Second one is the applicability of e-invoicing. Now e-invoicing has become very famous now. The applicability of invoicing says that if your aggregate turnover in any preceding financial year right from the time GST came into picture, in any preceding financial year right from 2017 onwards, that's when GST came into picture, if it is exceeding 5 crores, then you must do an e-invoice every month and then file your GST returns. So make sure you calculate your aggregate income for the previous year and years before, and ensure that if it crosses 5 crores, then e-invoice becomes mandatory and you should file the same on a different portal from the GST, which is different from the GST portal. That is the second point. The third one is to undertake a basic reconciliation between the book's GST returns and invoices. Often what happens is that as far as your sales is concerned, as far as your input tax credit or ITC is concerned, because of the issues or the wrong invoicing done by your supplier or because of wrong returns being filed, you might postpone the reconciliation of few months till the year end. So make sure at least before 31st March 25 or in the month of March, you do a 12-month reconciliation of sales and input tax credit, what is appearing in books, sales and credit, which is appearing in GST returns, and sales and invoices to ensure that any missed out sales or any input tax credit missed out or over availed or excess availed can be written off, written back, or whatever in the month of March when you file your GST returns. That is the third point. And lastly, under GST is a very famous scheme called GST Amnesty Scheme, which has an important due date of 31st March 25. Now, what this scheme talks about is that if you are a taxpayer and if you've received a notice for non-fraud cases in any of these financial years, 17-18, 18-19 or 19-20 or these years put together, aggregate. If you have received notices for these years or combined of these years, and the notice has an amount of tax, penalty, interest, the scheme has been brought up by the government to benefit you by saying that, look, pay the amount of tax which you received in the notice before 31st of March 25, and if you do so, the entire 100% penalty and interest will be totally waived off or ignored by the government. So if you've received notices for non-fraud cases in any of these financial years and that has tax plus interest plus penalty, ensure that you avail the amnesty scheme, file a few applications and make sure that 100% of the tax is first paid before 31st March 25 so that you become eligible for the scheme and the government will assess your application and ensure that the penalty and interest whatever is levied for these financial years is completely ignored or waived off. Well, I hope I was able to make things clear through this particular video. If you like the video, you could show the support to us by hitting on the like button. If you want more videos like these on a regular basis by way of notifications, you could also think of hitting on the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.